Everybody, welcome to today's fundamentals. Hello, Peter.
Hello.
What's up in the markets?
Well, we had the US dollar edged a little bit lower yesterday. Nothing much, nothing conclusive. I would be highlighting practically two issues. The first would be Fed Chairman Powell's, where he stated practically that despite inflationary pressures in the US economy easing, the bank is going to be raising rates even higher. And he also mentioned that the possibility of rate cuts seems to be excluded for the time being for 2023 and a part of 2024. He also more or less allowed for the notion that the bank is going to be keeping rates at a high level for a prolonged time. All of that is hawkish, and I would be noting that he also made a comment about the employment market. Remember, we had the US employment report for January on Friday, which was pretty better than expected. And exactly, Jerome Powell highlighted that this would imply that practically that this inflationary process may take a longer period. So overall, the comments deriving from Fed Chairman Powell were tilted more towards the hawkish side. I would be also noting that on a fundamental level, we had the State of the Union speech by Biden. Now, Biden is practically challenging the Republicans about raising the debt ceiling, which would allow the US government to actually borrow more and be able to spend more, especially on infrastructure. And should that be the case, we may see the USD getting some support, as that would allow practically a more loose fiscal policy on behalf of the US government. Now, north of the US border, we had the Canadian dollar, which tended to gain against the USD. It was an interesting move in the sense that we had the trade data of Canada. Now, the trade deficit widened, but not as much as the market had expected. So that was a positive for the Canadian dollar. The second element which supported the CAD somewhat was rising oil prices. And we had practically high expectations that China's reopening will increase its demand in oil, and that more or less tended to encourage traders to open buy positions for oil. While we have to note also that we had the release of the AP weekly crude oil inventories figure. It showed a drawdown of more than 2 million barrels, which more or less tended to imply that the slack in the US oil market may be over. So that in combination with the comments made by BOC Governor Tiff McClem, where he stated that the bank may raise rates even further and keep them there for a prolonged period. He also mentioned that analysts which are expecting rate cuts may be getting ahead of themselves. So more or less, he made some hawkish comments as well, which in combination with also the more positive market sentiment tended to provide some support for the commodity currency loonie.
And how about US stock markets?
US stock markets were on the rise. All three major indexes, Dow Jones, S&P 500, NASDAQ were on the rise, were in the greens. I would be noting that the improved market sentiment in combination with the earnings reports which were released more or less boosted the US stock markets. I would be highlighting today that we have two earnings releases which seem to be standing out. The one would be Disney, especially about its streaming service. Would be interesting to see if there are any results. And I would be highlighting also Uber, if it will be able to manage to get back into profitability or not.
And how have gold prices been behaving?
Well, gold prices were on the rise. The negative correlation of the USD with gold was showcased once again yesterday. It was characteristic that the precious metals price practically rose on the back of a weakening US dollar. Should that be the case, say for example, to continue that the USD is going to continue weakening, I wouldn't be surprised to see gold's price elevating even further.
And what's on the calendar for today?
Well, it's a very light calendar. It's a very easygoing Wednesday. We don't have any high impact financial releases. I would be noting, though, for oil traders in the American session, the release of the EIA crude oil inventories figure. It's the weekly figure. Should we get a surprise and see there being a drawdown being reported, that could provide some additional support for oil prices. Other than that, attention now turns towards the monetary front. We have a number of Fed policymakers which are scheduled to speak. Among them, I would be highlighting New York Fed President Williams, Fed Board Governor Cook, definitely Atlanta Fed President Bostic. Mind you, Bostic yesterday made some interesting comments. He stated that the idea of the Fed hiking even more is on the table. And that was perceived as slightly hawkish. That would imply practically that the Fed may raise rates above the dot plot maximum, which was indicated in December. And I would also be noting Minneapolis Fed President Kashkari and Fed Board Governor Waller. Now, all of them are scheduled to speak in the American session. There are no high impact financial releases. So fundamentals most probably will be leading the way regarding the direction of the market sentiment. And we may see media placing oversized attention regarding the comments which will be made by Fed policymakers. So that could be altering the market's mood somewhat.
Great. Thank you, Peter, for your time. And everyone for watching. Join us after a short break for technical analysis with Peter Iosif.
Hello, my name is Peter Iosif, Senior Market Analyst at IronFX. In front of your screens, you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be of the same time frame unless otherwise stated. Mind you that, sorry, despite the low volatility, the US dollar index is edging lower. It was characteristic that it broke below the 103.50 support line. Now we have to turn into resistance. Let's make the necessary corrections first. And let's go hunting for a new ultimate support line. This show would be great. You can see how the index has found support once, twice, 3 times, aimed for it here, provided resistance here, so that's pretty valid. It would be green, the 97.75. Readjusting the chart. Let's cook the labels as well. Starting with the R3, which is now being placed at 106.80. The R2 at 104.55. The R1 at 103.50. The S1 at 101.30. The S2 at 99.55. And the S3 at 97.75. Okay, we made the corrections. The chart is ready. Let's discuss direction. You can see that there was a slight bearish movement, which tended to intensify a little bit during today's European session. I would be considering that it would be more visible in the 1 hour chart. Allow me to switch from the 4 hour chart to the 1 hour chart. Here it is. Yet we would require a lower true than this one. The RSI indicator back to the 4 hour chart. The RSI indicator is above the reading of 50. It's actually now at 56.2. Yet it seems to be constantly dropping. So the influence of the bulls is fading more and more away. But it has to break clearly below the reading of 50 and start actively aiming for the reading of 30 in order for a bearish outlook to emerge. I wouldn't be surprised to see the price action stabilizing, but I would be noting also the bearish tendencies. Should the bears take over, we may see the price action aiming, if not breaking, the 101.30, a level which provided a number of times support, while even lower we note the 99.55. On the flip side, should the bulls be in charge, I would expect the price action to reverse direction, break the 103.50 resistance line, and start aiming for the 104.55. Let's have a look at Euro USD. Stabilizing, even breaking the downward trend line guiding it, and surfacing above the 1.0730. Definitely this has to be corrected and turned into support line. Let's go hunting for a new resistance level. But this peak here seems to be valid in red. $1.81185. Let's click the chart. Let's correct also the labels. The S2 and the S3. Replacing the S3 at 1.0435, the S2 at 1.0580, and the S1 at 1.0730. The R1 at 1.0935, the R2 at 1.1055, and the R3 at 1.1185. locking everything in. Let's talk about the direction. Clearly the downward trend line guiding the pair since the, let's have a look, 2nd of February has been broken. And that would be signaling a change of trend. So we abandon the bearish, and that would be in favor of a sideways motion initially. Interestingly enough, the RSI indicator seems to be rising, aiming for the reading of 50. It's still below it. It's currently at 42.8. So there's still some way to move before actually signaling a rather decisive market. Yet the stabilization, the breaking of the downward trend line, the stabilization of the pair tends to imply that the sideways motion is probable for the time being. We'll wait and see how exactly the market reacts and whether that's going to be pushed higher. And that could be a bullish scenario if the pair starts aiming, if not reaching, the 1.0935. Even lower, we note that a possible bearish scenario could be once again displayed should the price action drop, break the 1.0730, and aim, if not even reach, the 1.0580. Definitely for a bearish scenario would require a lower true than this one. Let's have a look at GBP/USD. A very, very similar picture. You can see how cable jumped, broke the downward trend line guiding it practically since the 2nd of February. The interesting element here is that in contrast to the euro, the pound seems to have more bullish tendencies, or more clear-cut bullish tendencies. You can see that it has drawn one true, the next is higher, one peak, the next is higher. So we may see the pair slowly but steadily being on the rise. And it's also characteristic how the RSI indicator has neared the reading of 50. It's currently at, give me a sec, at 47, which may imply some bullish tendencies on behalf of the market for cable, which could push it higher. And cable, I wouldn't be surprised to see it reaching 1.2265. On the flip side, should the bears regain control, we may see the price action dropping, breaking the 1.20, and start aiming for the 1.1840. Let's have a look at USDJPY. Another interesting pair, given that the price action has dropped below the 130.90, it's actually revolving around it. So let's turn this into a resistance line for now. Let's go hunting for a new ultimate resistance support level. Okay, there's a level here, but in my opinion that's too close to the R2. I would be preferring this one. A little bit higher. And that would be the 125.10 in green. Locking it in. Let's readjust the levels as well. Starting with the R3, which is now being placed at 134.75, the R2 at 132.85, the R1 first resistance line, which is currently being tested and practically acts as a axis of the price action sideways motion, given that it revolves around it. It's the 130.90. The S1 at 129.30. The S2 at 127.25. And finally, the newly identified S3 at 125.10. For the time being, given that the price action is revolving around the 130.90 in a tight range-bound movement, given also that we have an RSI indicator which is also revolving around the reading of 50, implying a rather indecisive market, that tends more or less to support the idea that the sideways motion is for the time being to continue. Hence, our bias for the sideways motion to continue is being maintained. Yet, I would be noting that should the bulls take over, I would expect the price action to rise, break the 130.90, break the 132.85, a higher peak than this one, and that could be signaling a bullish outlook. On the other hand, should the bears take over, I wouldn't be surprised to see the price action dropping, breaking the 129.30, and start paving the way for the 127.25. Let's have a look at the other safe haven currency pair, that would be USD-CHF. As we expected, the price action dropped, yet remained between the 0.9275 and the 0.9145. So more or less, the bias for the sideways motion between the R1 and the S1 still stands. I would be noting though that there are some bearish tendencies, but for a bearish outlook, we would require a clear breaking of the 0.9145, which would allow practically the pair to start aiming for 0.9025. On the flip side, should the bulls take over, we may see the price action rising, breaking the 0.9275 and start aiming for 0.9405. Boys at Research also highlighted this, but once again, as long as the price action is between these levels, we tend to maintain the bias for the sideways motion to continue. So in this case, I would expect the price action to drop even further, bounce on the 0.9145 and raise back up. Moving now to the Aussie against the US dollar. In a similar pattern, AUD-USD was on the rise. It was indicative how it broke the downward trend line, practically ending the bearish trend. It seems that the pair rose, yet has some slight difficulty actually having a bullish outlook. Okay, on the one hand, we have an upward trend line like this. On the flip side though, note how these two peaks are very, very near the same levels. So there seems to be some resistance there, or at least the market does not allow the bulls to proceed with the same difficulty. For a bullish outlook, I would require a clear breaking of the R1 0.7010, and the price action to start aiming, if not even reaching, the 0.7130 level which provided resistance here. On the flip side, should the bears take over, we may see the price action, let me delete this, dropping, breaking the S1, and start aiming for the S2 0.6740. On the other hand, more or less a sideways motion could be continued should the price action actually respect the R1 and the S1. Let's have a look at the other commodity currency pair, that would be USD CAD. A wide sideways motion being maintained between the R1 1.3470 sorry, and the S1 1.3285. We tend to maintain our bias to the sideways motion to continue between the pre-mentioned levels, and should the bulls take over, we would require for a bullish outlook the price action to rise, break above the 1.3470, and start aiming for the 1.37. On the flip side, should the bears be in charge, we may see the price action dropping, breaking the 1.3285, and start aiming for the 1.3095. Mind you that the RSI indicator has dropped just below the reading of 50, but nothing conclusive for the time being. There seems to remain some indecisiveness in the market about the pair's direction. Let's have a look at the Kiwi. Here we go. Yep. And the DUSD, clearly as before with the Aussie and the CAD, we see a clear-cut interruption of the downward trend line guiding the pair since the 2nd of February. So we have to switch here our bearish outlook in favor of a bias for a sideways motion, probably between the R1 0.6360, the level which provides resistance here, and the S1 0.6270, a level which provides support here and here. It's interesting how the price action practically is confined between these two levels. The RSI indicator is on the rise, just below the reading of 50. It's currently at 44. So it's nearing a rather indecisive level, which could be allowing for the sideways motion to continue. Should the bulls take over for any given reason, say for example that we see some slight bullish tendencies in the last 6 candlesticks, we may see the price action rising, breaking the 0.6360, which would be signaling a change of trend once again, this time to the upside, and start aiming for 0.6465. On the flip side, a bearish outlook would be signaled should the price action drop, break the 0.6270, and start aiming for 0.6190 level, which provides support, ample support here. Let's move now to gold. Gold, which is about to just break above the 1880. Note how the precious metals price has edged higher. It would be interesting to see the big picture here, especially the D1. 1, 2, 3 candlesticks in the greens. They're not a decisive rise, but they're still clear cut. And it's interesting how the price action has broken the downward trend line guiding it since Thursday. So we switch our bearish outlook in favor of a sideways movement for now. For bullish outlook, I would require a clear-cut breaking of the 1880, which has not happened yet. On the flip side, should the bears take over, we may see the price action dropping, breaking the 1824 support line, a level which provides support here, resistance, 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 and start aiming for 1766. Now, once again, a bullish outlook could be formed should the price action break clearly the 1880, not like now, which is just being tested, but a clear-cut break above it, and the price action reaches the 1928 resistance level. Let's have a look at US stock markets, and we'll make a start with Dow Jones. A nice tight sideways movement for Dow Jones despite touching a high yesterday. You can see that in the daily chart. Yet we have to note some slight differences here. Back in the chart. For bullish outlook, we would require clear breaking of the R1 34,400 and the price action to start aiming for 35,500. But for the time being, low volatility, a dropping RSI indicator, which is currently at 59, tend to imply that the sideways movably will be continuing. It's interesting to note also how the price action of Dow Jones has reached the upper bulge and has corrected up, showing the limitations. And also know that the bulge bands seem to remain pretty narrow. It's correct that the diameter here is pretty similar to this one. So for the time being, we tend to maintain our bias for the sideways motion to continue 34,400 and the 33,400. Should the bears take over, we may see the price action dropping, break the 3,400 and start aiming for 32,500. Let's have a look at NASDAQ. A nice jump higher than yesterday, practically escaping the narrow range bound movement of the index, NASDAQ. But NASDAQ is confined between the 12,400 support line and the 12,820 resistance level. So overall, ways for the index to remain in the size motion between their 1 and this 1. For bullish outlook, we would require clear breaking of the 12,825 and the price action to start aiming for the 13,445. That would allow us to start drawing also a nice upward trend line, showing us the limitations of the upward movement. On the flip side, should the bears take over, we may see the price action dropping, breaking the 12,450 and start aiming for the 12,120. I see that some of you guys want to have a look also at the S&P 500. If we have time, we'll have a look at that as well. Let's move to WTI. WTI, which is on the rise. Interesting enough, there is a steep upward trend line guiding the market. Here you go. Let's readjust the levels. definitely 78 has now turned to support once again. To maintain our bullish outlook for commodities price and also the RSI indicator, which has been on the rise since the 2nd of February, maybe, or aiming, if you prefer, for the reading of 7 at 61.1. So there is a nice bullish momentum building up in the market sentiment, which may allow the commodities price even further and start aiming the 83.20. The trend line is still intact. We tend to maintain a bullish outlook. On the other hand, note how the price action is now nearing Japan, which slow down the bulls of oil somewhat, or even cause a correction lower. Should the best, they would expect the price to drop, break the 78 support line, the upward trend line. That would require opening of the 73.6, the low which provided so beautifully here, 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 and here, and resistance here. Here, though, see how the downward trend line will. It is very interesting element. And at this point, I would like to have a look also on the chart so that I get more info. Okay, the big picture, WTI seems to be revolving the 1 and the S2 in a very clear-cut sideways. Let's have a look at that. And it's 20. It's a very interesting chart. For the time being, we still maintain the view that the bullish movement continued. 1, due to the upward trend line. 2, due to the rising RSI indicator. On the other hand, small warning, the price action has reached the upper bullish band and that may be slowing down the bull somewhat. Lots of you guys have mentioned happening with tier 1, given earthquakes in Turkey and Syria, a wide humanitarian itch should make us more sensitive. Unfortunately, tier 1 continues to weaken. It has broken above the 8.80, sorry, the 18.80. So let's make the necessary corrections. Okay. Now we are through a little bit. There's a very slow, steady upward movement which cannot, despite the curve of stability. overall, I think that the earthquakes did have little, if any, market significance. Let's correct this resistance line to support line. Okay, now is being placed at 803, sorry, 530, 537. The S2 at 8050. The S1 18.8. Yeah. 118.9420. The R2 at 912. And the R3 at 1927. Please allow me to visualize the labels also on the daily chart. Very easy. A little bit time consuming though. In my opinion, DTY should be studied not in the 4-hour time, but the daily chart. And allow me to show you what I mean. Now that becomes far more clear. The upward movement, it's a very slight one, but it becomes very, very obvious once into the daily chart. Back to the 4-hour chart. There you go. And understand that also comparison pound against the CHF and the euro against the CHF. Yeah, sure. Let's have a look with the euro against the Swiss franc. Clear-cut chop, no question about it. Definitely some readjustments here are required. We are always for a chart, don't forget. Yeah. Readjusting the chart. Let's make the corrections in the labels. $96.55. Widen the chart a little bit. Moving now to the S2, which is being placed at 0.9740. 0.98 for first support line. $0.9880 first resistance. The price sector is broken below it. $0.9950. The final resistance line being played 1.0045. Yep. Let's talk a little bit about the direction. We have the RSI indicator, which is at the reading, actually below the reading of 30, implying a rather bearish sentiment, or a clear-cut bearish sentiment. At the same time, maybe also implying that the price, or the bears, if you prefer, may have gotten a little bit ahead of themselves and a correction higher. So we have to bear this in mind. There is a clear downward guiding the pair, more or less imply that the bearish sentiment is more than real and could continue guiding the pair lower. We maintain a bearish outlook as long as the price action remains below the downward. Let's have a look at GBPC as well. Now things here are not as intense. Downward trend line has been broken, and there seems to be stabilization. Overall, there seems to be more strength in the pound than the euro. Let's go hunting for a new support line. About here. Okay. Overall, we tend to maintain a bias for a bearish outlook, so for a sideways movement, the pair's relation, but this scenario could also be playing out. And in that case, we may be seeing some bearish tendencies as well. Next 24 hours will provide us with indicating about where GBP CHF is heading to. That should sum it up from all of us here at IronFX for solid trading.
Hello, my name is Christina, and today I will talk about GDP. Gross domestic product is the monetary value of all goods and services produced in a nation during a given time period, usually a year. Basically, it's a record of everything bought for money during the course of 1 year. Consumer purchases from a chocolate to a car and counted in the GDP. When businesses buy computers or export goods overseas, the transactions all increase the GDP. Government spending also contributes to the GDP. A related statistic is the GDP growth, which is a percentage that shows how fast the economy is growing. If the annual rate of GDP growth is 3%, that means the economy is 3% larger than it was the previous year. The rate of GDP growth changes depending on the health of the economy. During an economic downturn, the economy contracts and GDP declines. For example, the recession that lasted from 2007 to 2009 was a severe period of economic decline. A GDP figure that shows strong economic growth means that businesses are making money and can hire people. Unemployed people are more likely to find a job and consumer spending rises, leading to more profit for businesses and even more hiring. Government leaders analyze GDP reports when creating economic policy. The US Central Bank, the Federal Reserve, uses the GDP report to gauge economic activity. Investors look for signs of sustainable economic growth in the GDP report, paying close attention to the information it contains, especially corporate profits. Business leaders analyze the economy's performance as is reflected in the GDP report so they can decide on future investment and production. As a measure of the sheer size of the economy, the GDP provides economists and ordinary citizens alike with a convenient and accurate measure of economic vitality or the lack of it. Thank you for watching.
Let us begin. So yeah, welcome to another webinar series brought to you by IronFX. So today we'll be going through the Fibonacci series, 3 out of 4 on expansions. So I got to read the disclaimer first, so do bear with me. So the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. So this material is just the personal opinion of the author, which is myself, and the client's investment objectives and risk tolerance have not been considered. So IronFX is not responsible for any loss arising from any information contained. Redistribution of the material is strictly prohibited. Hey, hi there, Andrew Robinson. Okay, I was just about to start the webinar on Fibonacci series, part 3 of 4 on expansions. Okay, just a very, very quick introduction to myself. My name is Chen Yongting and I'm actually from Everest Fortune Group. So we are actually the finalists for the best Forex research for 2019, 2020, and 2021. We are also the finalists for the best equity research for 2020 and 2021. So right now we actually have a very, very special collaboration with IronFX where we are bringing you guys the good stuff. Okay, before we begin, so I'll just show you guys. So if you want to find out more of these free webinars like this in the future, you can go under ironfx.com, under IronFX School, under webinars. So you can click on it and then I'll send a link to the chat also. So that's where you can sign up for future webinars like this. Okay, where's it? Webinars? Okay, where's that link? Okay, I think I have an ad blocker in place. Okay, it's right here. At the bottom. Okay, I just saw it disappeared again. All right, here. Okay, so yeah, right there, Fibonacci series, 3 out of 4 expansions. Next, we actually have Jindal and Sarah, which is tomorrow. Okay, there's also the IronFX YouTube channel. You can actually watch replays on the past live that we have actually went through. So I'll send the link to the YouTube channel. You guys can check it out there. And last but not least, if you want to contact me outside of this webinar, you can actually contact me through this link right here. I just send the link to the chat already. It's a Linktree link about myself. Is basically a portfolio of myself, LinkedIn profile, and everything else about me. So feel free to check it out. Follow me there if you're interested. ask me any questions that you want outside of this webinar. All right, let us begin. Okay, so a few topics to cover today. Few agendas, a recap on Fibonacci retracement essentials, ideal market structure, significant swings, and following the market trend. We also have the different Fib retracement levels and what are Fibonacci expansions, which is the main highlights of this webinar, and going through confluence levels. So let us begin. So Fibonacci retracement checklist, just a very quick look at this. The market structure, is it clear or not? Look for big zigzags. So actually you notice that the market is moving very closely along the Fibonacci trend line. So you can actually see this nice little blue line right there going through the charts. Let me clear this out. So it's actually a very clear structure, very clear downtrend, bearish market. So identify the recent trend, prices going up or down. In this scenario, it's going down. So you connect the two extreme points, drawing from the top of the swing high, which is the starting point, to the bottom of the swing low. So this is how you draw a Fibonacci retracement. Okay, looking at this, insignificant swings. Recap. You're not going to care about all these tiny movements on the chart. Take a look. So look at this GIF, is actually drawing out all the insignificant swings or using the orange highlighter. It's too insignificant, so you cannot just draw randomly, you know, from this tiny little swing up to this high right there. It's not significant enough. You need to be drawing from this significant swing low right there to this highest point somewhere there. So you draw the Fibonacci, it should look something like this. That is a proper significant swing. So if you want, I can actually show an example on the chart. Maybe there's an example. Okay, insignificant swing showed you already. This is too insignificant. All these kind of swings right here, too insignificant to even draw out. Okay, let me see. So this is actually a very nice significant swing move right there. Can see? From a swing high, drawing towards a swing low. So it's actually a significant move up with obvious, clear market movements. Okay, let me check the previous slide first. Did I miss out anything? Okay. Next, drawing a significant swing. So here's another example of significant swings. So I've actually drawn out the peaks and troughs to point out exactly how clear it should be. So this could be a significant, where is it? Significant swing point. Swing points towards the downside. So you should only be focusing on this. This is just minor swings, which is insignificant. Focus on this that I've circled out, drawing the Fibonacci from the top to the bottom. So it's a very clear-cut swing right there. Okay, next, let me move on. So next, following the market structure. So the Fibonacci retracement, here's an example of how to not draw a Fib retracement trend line. Your Fibonacci trend line must follow price structure clearly. Hello there, Olivia Ponche. What time frame do you use? Well, time frame doesn't matter. Even on 1 minute, you have to find something that is significant. It even works on the 1 hour time frame, 4 hour time frame, 15 minutes time frame. So I'll show you, since you're asking that, I'll show you an example. Okay. Let's move on to the live chart first. So let's start from the daily. The daily chart. So if you want to draw a Fibonacci trend line from the daily chart, you should be drawing from this significant swing high right there to the next significant swing low right there. So in order to use the Fibonacci trend line, the tool is right here on the left side of trading view. You should be going right here. Trend line 1, 2, 3, you expand it out. It should be called the Fib retracement tool. So you draw it from the top of the swing high, draw it to the bottom. You notice that it's very, very nice. There's a very, very significant swing. So clearly, price is currently trying to reach towards the 50% Fibonacci retracement line. So it's right here at the 50%. We can possibly see, so for example, right here, euro dollar to likely head towards the 1.09440 level, which is also the Fibonacci 50% retracement. Okay, let's move on down towards the daily, towards the 4 hours chart to draw another one. So let's move down to the 4 hours. So we are looking at a significant swings. So this could be a very, very significant swing. So a swing right here towards a significant swing towards the downside. So you can actually draw a Fibonacci line from the bottom towards the top. You actually notice that price actually retraced back down towards the 61.8% before it continued pushing bullish. So another point you can draw out is, since that point swung up, this was a significant swing, and then this was a significant swing high. Same thing, you draw a Fibonacci line from the bottom to the top. It's following very, very closely, very, very nice. And then it swung down. Where did it retrace towards? That's the question. It retraced towards the 61.8% Fibonacci line before pushing higher. All right. So let me find a clear-cut one. So there isn't anything clear at the moment that we can actually draw out. Okay, let's move down. Okay, before I move on, this could also be another significant swing. Look at this very, very obvious swing towards the downside. You can start to draw a Fibonacci line, drawing from the top to the bottom, and you notice that price also retraced back up towards the 61.8% Fibonacci line before rejecting back down. So that's a very, very nice way to draw your Fib levels. So next, let me show one last example before we move on towards the 1 hour chart. It's actually the same on all time frames. So this is a significant high, significant low. Can draw price actually retrace all the way up towards the 61.8% before rejecting towards the downside. So time frame doesn't matter as long as you know how to draw your chart properly. Everything works well. Hey, hi there, Xion on Yen Ni. Hi there. Let's move on towards the 1 hour chart. Okay. So by the way, those who have just joined, I've actually turned on the chat already. So you can ask me any questions there within the chat. You can talk to me there. Ask me any questions while moving on. If you do not understand, feel free to ask any questions. Do not feel that you are slowing down the entire webinar. If you do not understand, that's what we are here to. We are here to learn. So looking at this 1 hour chart, this could be a significant swing high. This was a swing high. It went all the way back down. A significant swing low. It retraced back towards the 61.8% Fibonacci line. So it went down, tapped, and rejected towards the downside. Okay, next. This was also a very, very obvious. You only would be drawing Fibonacci line at the very obvious points. Significant swings. So you draw a Fibonacci line from the top towards the bottom. Price actually retraced from the bottom towards the 61.8% Fibonacci line before, it kind of short sellers try to take over, but the buyers took hold. So likely we can see euro dollar continue moving to the upside. Okay, so just move on 30 minutes. I'll just continue making it faster and faster So this is actually quite a significant swing also. Significant swing, it actually swung up, hit back down, and retrace back up. So you can draw a Fibonacci line from the bottom towards the top. It likely retraced towards the 23.6% Fibonacci line. You can see right there. Very, very clear cut. Price very, very nicely moving. Hit back down, retrace, and shot right up. Hey, hi there, Rajesh Rama. And hi there, Tivin Campbell. Okay, Juha, you actually want to see Brent's oil retracements. Well, let's go towards that. So if you are watching on your computer, feel free to open TradingView. Let's practice this together. Hopefully we can improve our trading together. Okay, let me turn on crude oil. All right, crude oil, Brent crude oil. Okay, looking at this, okay, maybe I should move towards the 1 hour chart. It's a very, very obvious significant swing high right there that we are looking at before price swung all the way down. So we can actually draw a Fibonacci line from the top to the bottom, and you notice that price likely just tapped very, very nicely within the 50% Fibonacci line before it rejected towards the downside. So these very, very clear cuts, very, very obvious, and it's extremely clean. You notice it's very, very close to with the Fibonacci trend line, bearish trend line. So next, another one I would like to show you. Looking at this specific scenario, very, very obvious swing, very, very obvious swing low. You can draw a Fibonacci line from the top to the bottom. Price actually retraced back up to the 78.6% Fibonacci line. So it's quite a high retracement. Price followed very, very nicely before it retraced back up and shot towards the downside. Okay, let's move on back to the chart, to the PowerPoint presentation. Okay, so let's go through this one more time. Fibonacci lines, retracement lines should not cut through two large areas of the market structure. So in this specific scenario, this actually cut through the trend line. It's not valid anymore. It's not clear. It should be following the market structure very, very cleanly. So when you're drawing a trend line, you should follow the price of movement and not deviate too much. Any questions so far? Feel free to let me know in the chat. Okay, let's move on. Okay, as I mentioned just now, through that practice that we had, price is following very, very nicely with the market structure. So you saw it's following very, very nicely. That's how you should be drawing a Fibonacci retracement trend line. So it works well when it follows price movements, and Fibonacci lines actually work better on higher time frame. Why? It's because it's due to less noise. Less noise as in less deviation away. So price does not move away too much from the Fibonacci trend line. Okay, next, let's move on. Okay, clear market structure. This is actually very, very clear cut. This is a very, very nice very, very nice market structure. So although a fib retracement can also be used in both choppy and trending markets. So it's important to look for clear market structure. So in this case right here, clear swing high, swing low, clear swing high, and a clear swing low. Then clear swing high again, clear swing low, and another clear swing high. So if you want to screenshot this, please screenshot this now before we continue. You can whip out your phone, take photo before we continue. Okay, next. This is a very, very unclear market structure that we do not like at all. Okay, so you see, price does not, where is it? Price, there's no significant swings at all. Price is very, very choppy and it suddenly moves up. Even the downward, it deviates. Let me clear everything. even if you try to draw a Fibonacci line from the top of this swing high towards the swing low, is totally wrong. It's because price, this area deviates quite far away from the trend line. Same thing if you draw from the bottom to the top, the bottom right here to the top, if you actually draw a line across, it's not that clear because price went up and it's this area, it actually retraced too much. So it deviates quite far away. What you want is for the trend line and price to be relatively close with it. Okay, let us move on. So there are actually Fib numbers that we typically use in trading. You can actually take a screenshot now if you want. Please screenshot this down. It's very, very important. Screenshot this down and please apply it. Please try to apply Fibonacci trend lines when you are trading. So now that we know how to draw the Fib retracement trend line, let's look at the different types of levels ranging from negative to above 100%. So although the tool used is Fibonacci retracement, it can lead to 3 types of Fibonacci expansions, those below 0%, which is the Fibonacci expansions right here, negative 61.8% and negative 27.2%. You will only be using these two. So retracements, those from 0 to 100%, which is the regular ones. Right here, regular ones, 0 to 100%, and extensions, Fibonacci extensions for those above 100%, which is the 127.2% and the 161.8% Fibonacci extension. So we will go through expansion and extensions more in depth in the coming webinars. So in this webinar, we will just briefly introduce the levels. So I'll give you guys one last chance to actually screenshot this down, take a photo before we continue. All right. Okay, let us move on. Okay, here you can see all the different Fib numbers that we mentioned in the previous slide and how it looks drawn out. So take a note of the starting and ending points. So we started drawing from here and ended drawing here. So take note of the starting and ending points of our Fibonacci trend line, the mid-range retracements, negative expansions. So the negative Fibonacci expansions are right here. And the above 100, the positive Fibonacci retracements. So in all of these 3 Fibonacci scenarios, we are only using one tool at the end of the day, which is the Fibonacci retracement. All right, let's move on. Okay, today we'll just be focusing on the negative Fibonacci expansion. So using the Fibonacci retracement tool, we make use of the negative levels, namely the negative 61.8% and negative 27.2% Fibonacci levels. So when using the tool, look out for flash, zigzag, or lightning symbol. So ideally, price should retrace at least 50% in 0.3 as shown in the video right here before reversing off. So take a look, draw from starting to ending, retrace at least 50%. Before you notice, price actually rejected off the negative 27.2% Fibonacci line. Okay, take a look. It looks like zigzag, like a Harry Potter zigzag line. So the explanation, the clearer the movement of the flash zigzag, the better. We ideally need to wait for prices to retrace at least 50% in 0.3 before taking off in the other direction. Okay, So maybe I'll just watch through it one more time. It actually rejected right here, rejected back down towards the downside. Okay, next, Fibonacci expansion. Okay, let me see. So here is an example of expansion and how it plays out. So starting and ending points, take note of it. Starting right here, ending point right there. Price actually retraced back up to the 61.8% level. So we show how to make use of the support in the negatives. So potentially we want to look out for flash zigzag, potentially look for price to retrace back up before heading downwards towards the negative 27.2% Fibonacci retracement line. We take a look, price actually retraced back down towards the negative 27.2%. Okay. Okay. Bounce back up. So take a look, price when it touches very, very nicely within the negative 27.2%. Price usually comes back to the ending points. So yeah, please screenshot this down before we continue. Please screenshot this down, just showing examples of how it works. Okay. Next, let us move on. Take a look. Even at the negative 61.8%, price actually tapping ultimately into that. You are drawing from the starting point to the end point, price went up, retraced back down, and went back up towards the negative 61.8% retracements before, heading back down towards the end points, which is right here. So yeah, you can actually use the negative expansions, negative 61.8% and negative 27.2% as a potential take profit target. So once price steps into that level, you can look to actually close out your trade already, just in case price reverses back down like in this scenario. So let us continue. Okay, so take note of the shape of the flash. Make sure price reverses to at least 50% before breaking the starting point. So we draw it from the starting point towards the end points right there. So price retraces back at least 50%. So from bottom to the top, at least 50%. And then it hits down towards the negative 27.2% Fibonacci expansion level. So notice price steps into that and immediately bounces right back up. So please screenshot this down also before we continue. This is the example number 3. Right, give it a moment. Okay, let us continue. Okay, so next, looking at, okay, in this GIF right here. So take note of the shape outlined by the orange arrow. So price retraces more than 50% of the Fibonacci trend line. So in this case, more than 100% and reverses nicely off the 27.2% Fibonacci expansion. So take a look, price retraces back down. So maybe we can start doing some, some kind of practice session, intense practice session. So let's find an example. Okay, if you notice right here, I'll be drawing a Fibonacci line from this significance swing high towards the significance swing low. Hey, hi there, Samuel Julian. Nice to see you. So we'll be drawing the Fib from the top towards the bottom. So just now, as I mentioned, price retraced back up towards the 78, at least 50%, 78.6. So we can actually start to see price possibly heading towards the expansion level, negative 27.2%. So notice price actually tapped very, very closely, went down, tapped pretty closely towards the negative 27.2% before it retraces back up. So yeah, this is one example on the live charts. So maybe we can start to look for more. Okay, let me find another one. Maybe likely, possibly looking at the euro dollar. This is a currency pair that I like to look at a lot. Okay. Let me find it on the 1 hour. Okay, let me find a clear one instead. Okay, maybe let's take a look at this. I'll test it out. Okay, didn't bounce, didn't retrace, not good enough. Let me find this. Okay, this is a pretty nice one. If you take a look, instead of 78.6, let me find 50%. So notice, I will be drawing a Fibonacci line from the bottom of the swing low towards the swing high, and then price went up, retrace back down towards the 50% Fibonacci line before pushing up relatively close towards the negative 27.2% level before it actually retraced back down. So just take note, that's how you actually use the Fibonacci expansion levels. So let us find another example, another nice example. Okay, let me find it. Okay, trying to find a clean one, at least 50%. All right, so likely this scenario, so let me test it out. It wasn't close. This is not the greatest example because I'll be drawing from the swing high towards the swing low. Price actually retraced back up towards the 50% Fibonacci line before heading relatively close, not close enough, towards the negative 27.2% before it just shot right up. So let me find another example. We'll be just doing practice sessions like this. Okay. Okay, this is quite nice. Okay, let me draw. Is it good enough? Okay, it's actually not good enough. Why is this not valid? This is not a nice Fibonacci line because price actually deviated quite far away from this trend line right there. So this is not a good example. So let us move on. Let me find another one which is nice. All right. Clean one, trying to find a clean one. Likely this could be possible. Okay, this is actually quite nice. So you notice that price swung from this swing high towards this low, and it retraced back up towards the 50% Fibonacci line right there before it shot down towards the, I think it did hit the negative 27, negative 61.8%. So it actually didn't, it went towards the negative 27.2% Fibonacci expansion line before it kind of consolidated before shooting back up. So yeah, always just try to look at the negative 27.2% as a potential take profit target. Okay, let's find another one. Find another significant swing. So yeah, this is actually quite a nice one. So you notice that we have a pretty much a significant swing right there. So I'll be drawing a Fibonacci line from the bottom to the top. You notice that price actually retraced down to at least the, let me draw it out, at least the 50% Fibonacci line. Price went up, relatively nice, went back down, retested, went back up, relatively close towards the negative 27.2% Fibonacci line before it rejected back down. So relatively close, pretty close, you can start to close out your trade already. So if you're actually aiming for exactly negative 27.2%, you might actually miss your close and not hit take profit. Okay, next. Let's find another example right there. 50%, there isn't anything nice. So maybe I'll move on towards the H4 chart so I can view things clearly. All right. Okay, maybe this right here. It is not clean enough. If I actually draw a trend line, I was looking at this area, wanted to draw a trend line right there. But what happened? It wasn't clear cut enough. It's pretty clear. All of a sudden, it deviates quite far away and it shot right back up. So this area actually caused me to not want to view this Fibonacci trend line as a valid one. Okay, let's find another one to practice. Okay, this is pretty nice. This is quite nice, drawing from this significant swing high right there. Okay, this is not significant enough. Let me find another one. This clear cut enough. I think I might be looking at one. So this is quite a nice swing high. Okay, but it did not retrace to 50%. Okay, maybe it did. Okay, here is quite nice. So take a look at the H4 chart. So from this significant swing high towards this significant swing low, price is moving very, very closely along the trend line, tap right into it, shot right back up, retrace towards the 50% Fibonacci line before heading down towards the negative 27.2% Fibonacci expansion line. So what happens after price steps into that? As we have done many back tests, price actually consolidated a bit before rejecting back up towards the starting points of this trend line, of the end points. So if you actually draw a box over, this is where we draw the Fib. All right, any questions so far? Do let me know in the chat, since we are here to learn. Anything you guys do not understand, just ask me. I'll try my best to answer you. Okay, let me check if this is significant enough. Okay, this is actually not bad. So drawing from a significant swing high towards the significant swing low, price is very, very nicely along this trend line, went back up, retested the 50% Fibonacci line before it shot right down towards the negative 27.2 Fibonacci retracement line. So just now, as I mentioned, price usually hits back up to retest the endpoints, the previous swing low. So I'll just draw a box out, an extended box, maybe an extended box red. Notice that price actually more or less hits back up towards that area. So it taps into also the negative 61.8% before it rejected, and relatively near towards the starting point, the end points of the Fibonacci line, and then just continued heading back. So what do we call an area like this? We can call it an overlap resistance. So I'll just type it out in case you don't know how to spell it or don't know what I'm talking about. It's the overlap resistance. So inside center break. All right. So yeah, if you want, please screenshot this down before we continue. Okay, I'll just screenshot this down and send it to the chat. Copy link to chart image, send it. All right, I've just sent the link to the chat. You guys can actually check it out right there. So it's actually quite clear cut on that. We can actually move on. Okay, next. Let me move back towards the slide that we are going through. Okay, this is not okay. Invalid Fibonacci. When does a Fib retracement becomes invalid? So one of the most common scenarios is when price makes a lower low. Assuming you are drawing a Fibonacci retracement from the top to the bottom, like in the picture. Okay, never mind, like in the picture. So if there are bars on the right that breaks your ending point, it becomes invalid. Just like I mentioned, it deviates quite far away, invalid. There are Fibonacci retracements that are negative 27.2%, negative 61.8%, and we'll touch on them as they basically go through your endpoint, yet they are still valid. So take a look. Price breaks the points. We wanted to draw from the top towards the bottom, but price didn't retrace back up to 50% level, at least 50%, and it continues going down. So this kind of no longer valid already. Always look for at least 50% retracement. Okay, next we are going through combining Fibonacci levels. So it's for confluence to our trade. Okay, give me a moment. Okay, the trick is to find multiple Fibonacci retracement levels lining up together so that you can increase the probability of a bunch of Fibonacci retracement levels working versus a single Fibonacci retracement level working. So this is the definition of a Fibonacci confluence. So I'm just showing a very, very quick example. The negative 27.2% Fibonacci expansion is in line with the 161.8% Fibonacci extension, in line with the 78.6% Fibonacci projection. So many confluence of these levels, and then price just bounce right back up. So maybe I can show an example on the live charts. So let's take a look. I'll try to find one which is nice. So maybe why price bounce right off that area. Likely we can try to see something. Okay, there, negative 61.8 and an expansion. Okay, there isn't a level right there. So I'm trying to find a nice level, a projection level. Okay, we don't have it right there. Don't have it. Not clear cut enough. Expansion drawing up. Okay, maybe we might have something right here. Okay, there's nothing right here. No confluence levels yet. Drawing a fib. No confluence yet. Okay, let me find one. I've got to find an example for you guys so you guys can understand. Wait. Maybe this level. Okay, maybe this nice level right here. So can draw a Fibonacci line. This is quite a nice tick. Okay. So we actually have a nice Fibonacci. We can draw a projection from the top to the bottom and then towards the top again. Likely we might be able to find some kind of confluence right there. Okay, this is very, very weird. Let me move on towards the 1 hour. Try to find one that is significant enough for that bounce. Projection levels. Okay, this could be it. Try from the bottom, top, up. So with the 100%, I'm actually looking at this area right here, checking whether there was any Fibonacci confluence that caused price to retrace back down. Drawing a fib towards the bottom. Okay, there isn't any. Okay, that's weird. Let me just give me a moment. I'm still finding. Okay, this is not the one. Projection, top, bottom, and back up. 78.6%. Draw a fib. Okay, this is actually quite nice. Quite a nice retracement area. I'll draw the 138. So you actually notice that price actually. Wait, give me a moment. Let me clear this out. Trying to stick everything clearly in place. Just to show you guys how it works. So Fibonacci line, then we also have another line or Fibs. Okay, this is not the confluence. If you actually draw, notice that price actually tapped very, very nicely in the 127.2% Fibonacci extension level. So I'll just extended box green. So with that two confluence in place, 127.2% Fibonacci extension. Extension is the positive side. Expansion is the negative side. So we also have the 78.6% Fibonacci projection. So that's how we use it. You can possibly look for a buy entry right there for price to tap and rebound towards the upside. All right. Let us take a look next. Let's find another confluence. Okay. Okay, let me find. Okay. Potentially this might be it. Let me find. All Fibs. Okay, negative 61.8%. Showing a Fibonacci expansion, top to bottom. Okay, this is actually quite nice. If you actually take a look, the negative, the 78.6% projection and the 161.8% Fibonacci projection. Take a look. So I draw a projection from here. Bam, bam, bam. That's how I draw a projection. Getting the 78.6% Fibonacci projection. We also draw a Fibonacci line from the top to the bottom. We have the, so over here is the 78.6% Fibonacci projection. We also have the 161.8% Fibonacci extension. So these two right there actually added confluence to why price actually rejected back down. So price tapped into that level and rejected strongly towards the downside. So just draw that level out. It's quite clear cut right there. Went up, tap, rejected back down. Where does it reverse towards? It actually reverses towards the more or less the starting points of this Fibonacci high, the previous high right there. So you can call it a support, an overlap support if you want, extended box green. So this could be a nice sell entry that you could have caught right there. So I'll just copy link to the chart image. I'll just screenshot and just send it to you guys. I'll just send the link to the chat already. So any more questions, let me know. Any more questions that you do not understand on Fibonacci confluence, let me know. So let us continue and end this slide. So this another example, negative 27.2% expansion. Just showing examples. I don't expect you guys to, at the end of this session to be able to immediately implement it. You might want to go through some practice drawing on your trading view chart before you start to look for potential buy entries, reversal entries. Okay, let me find what else is needed. All right, for this example, price broke through the negative 127.2% and the negative 27.2%. And then price went towards the negative 61.8% Fibonacci expansion and towards the 161.8% Fibonacci extension. Price then tapped and reversed back down. So that area actually gives us a pretty strong confluence area that price can possibly reverse. Okay, same thing. Drawing down negative 27.2%, 127.2%, and even a 100% Fibonacci projection. So this entire area right here actually added confluence that price could potentially reverse and point back up. So price then proceeded to bounce off this very, very strong level. There's many confluence. Hey, hi there, Steffi, tap in. Okay, let me go through this. So stop loss beyond, what does it mean? It means that you should always put your stop loss beyond a key Fibonacci confluence area. So the reason for this is because more often than not, price is attracted to such strong areas of Fibonacci confluence, and if your stop loss is right before instead of beyond the area, Fibonacci confluence area, you can potentially hit your stop loss, get stopped right up when the market starts to reverse. And then traders start to complain about getting stop hunted, saying the brokers manipulated the market. It's actually not. It's actually there was a confluence, caused price to tap in before reversing back up. So take profit before. What does it mean? It means that you should always put your take profit target before a key Fibonacci confluence area. The reason for this is because when price reaches the Fibonacci confluence area, the reason for this is because when price reaches the Fibonacci confluence area, there's a high chance that it will not be able to go beyond it, and instead of reaching your profit target, it reverses back to your entry. So always put your take profit target just before the Fibonacci confluence area. Just slightly before, 1 or 2 pips before would be nice. So this is one of the reasons why people complain that the market is manipulated, because they miss their take profit target by 1 pip. So yeah, you can actually screenshot this down before we continue. All right. So once you guys have screenshotted it down, take photo down, let's move on. So we have come to the end of this webinar. So yeah, really thank you guys for joining. If you guys have any more questions, let me know. I'll give you guys 1 more minute. 1 more minute to ask me any more questions before I end this webinar. So until my time, 6:53, I'll be waiting for your questions. So meanwhile, while waiting for your questions, I would like to say that tonight, okay, for my time, it's tonight. It will be when I'm sleeping. It will be 2 a.m. for me when the FOMC news actually happens. So yeah, just take care trading. Please try not to enter any scalps just before the FOMC news. You can potentially get stopped out. And also Friday, we have the NFP. The entire week is really, really, very volatile. Hey, no problem, Juha. Hey, see you next time. See you next time. See you guys next time. Appreciate you guys for joining. All right. So let me just send that link one last time. Link 3. That's the link you guys can actually find me, can actually contact me there if you want after the webinar. So yeah, thank you, Juha. Thank you, Peter, Benny Brook. Thank you, Samuel, Julian, for joining. Hope to see you guys next time, and really take care. Stay safe trading. Hey, goodbye, guys. I'll be ending the stream now.